Here's the afternoon showing the 1:30 to 4:15 time window. Last hour of trading, we'll look at that in a moment. Fair value gap in here, we trade up into it here. We break down, return back to the fair value gap, create another smaller fair value gap. This is a short, that's a short. Sell side below here, rips into it here. If you take this high to that low, expand that lower as a measured move, create this low in your mind as a fulcrum point. The range high to that range low, multiply that, then project it lower equally, and you'll get the range lows that we're seeing here. I told you to use the fair value gap last night in the Twitter space and outlined the very levels, and 49.43.75 was the actual tick low. You can't improve upon that. That's it, hitting it right there. And the market closes at 4:15. At the last portion of the day at 1:30, if you're bearish, you can use the opening price at 1:30. Treat that the same way I teach you to use it on the midnight candle in New York, and at 8:30 and at 9:30. If you're bearish, the market rallies above that opening price, goes into a premium array, as we see here. You can expect this to do what? Sell off, and treat this whole price movement the same way I teach Power 3 for a daily chart. You can treat the same idea of Power 3 within a session. So everything is fractal. The algorithm sees it just like this. Opening price, this is a Judas swing. It's all manipulation up into a premium. Trades lower. Rallies back to the short-term premium array. Trades lower. Fair value gap, trades up into here. This low being taken out here, this is model 2022 right here. Now think, I teach you to trade this at the 9:30 opening, right? Everything is the same. We're just applying it to the market in small little segments the same way my algorithm does. So the logic the algorithm's using is it's using the protraction from this opening price when it's bearish and it still has undelivered targets down here. It's running up, creating a short-term overbought. We don't need an indicator to do that. Trades down, one more time up into a fair value gap, and then because of that, it creates that short-term low. It breaks below that short-term low. Fair value gap, your eye goes right there. From this high down to that low, midpoint equilibrium. So you're looking for a fair value gap at or above equilibrium. Where's it at? There. Trades up into here perfectly. Breaks down. Here's a wick. Where's it trading up to? Midpoint. Right there. There's another sell. So you can sell here. Pyramid. Wait for sell side to be broken there. We're partial, which is the top of the fair value gap on the daily chart. Trades down into midpoint, consequent encroachment. That's a partial. And then as it hits here, you don't want to use the low of a fair value gap for your target or partials. You always want to come off of that a little bit. Anywhere between a half a point to a full point, you'll always see me try to do that at the very minimum. Anything more would be, if I have a lot more targets below, which is something extra, no extra charge. And the 1 minute chart in the afternoon session, here's that fair value gap from the 5 minute chart inside the New York lunch hour. Extended it out in time. We trade up into it here. We shift lower. Fair value gap trades back up into it here. We break down. Remember I said once that low was taken out in the afternoon, after it ran up here, once that low is taken out, which it does here, that's a shift to market structure below the 5 minute low. We're seeing it on these individual 1 minute candles. Your eye goes back to what? The 5 minute fair value gap, which is this rectangle here. You may be looking at this and saying, what's that anchored to? It's anchored to this. Right there. These two lows here on the 5 minute chart are those single lows on the 1 minute chart that are separated a little bit wider because I had the chart zoomed in. And this run right here is back into the 5 minute fair value gap. Refer to these 2 points here, these 2 lows and this high. Refer to this rectangle. Think about where we're at, showing this and this with this rectangle. Now watch when we go into the 1 minute chart. That's these 2 equal lows on the 5 minute chart. When price goes below that, that's a shift in market structure. And then returning back up into that fair value gap, which this rectangle represents the imbalance or fair value gap on the 5 minute chart. I just dropped to a 1 minute chart, and this level is transposed to the 1 minute chart, and it's going to show all the individual 1 minute candles. That's that return into the 5 minute fair value gap. That sell right there. And then here's that run back up into the middle of the wick. You don't see a wick here until there for this time frame, but this is all a wick on the 5 minute chart. And it's trading up here into about half of that wick. And then it breaks down, creates a fair value gap here. Here's another partial. How are you getting in here and doing all these partials? You're not seeing every time frame I'm looking at. I'm looking at a 1 minute chart. I'm looking at a 30-second chart. I'm looking at a 15-second chart. So I'm looking for all these things. Once I'm in the right side of the marketplace, I'm going to be hammering. As long as I have room to build in the position, I have equity to use and within my risk model, then I'll take every premium array that it gives me, and I'll build the position up to 10 or 14 or 16 contracts, and then let it go. Fair value gap breaks down. The 3961.75 level also. This is an old daily low, as you can see here. That low, if you don't know what that is drop a horizontal line on 3961.75 and go back up to a daily chart and look back a couple days, and you'll see